plus 64.58% return this year.
Versus 27.3% gain for the S&P 500. Apple phones gained market share from 18.9%.
How you doing, guys? It's Damian here. There are a lot of investment gurus or YouTubers who share their stock market investing ideas or try to teach others how to invest. The problem is that they do not show their investment portfolios. You do not know if they are successful in what they are teaching you and what their investment results are. We can compare that situation to being taught by a teacher who is not practicing the craft. I do not believe in being competent in something if you are just a theoretician. Ask yourself if you would like to be trained by an obese fitness trainer. Probably not, but still many people follow videos of people who do not share information about their portfolio and stock market investments. You do not know if they are successful in what they do. That is why I will show you today my pension stock market portfolio, in which my investments achieved plus 64.58% return this year. I will reveal every position and every transaction I made in that portfolio. Watch to find out which companies are owned in my pension portfolio.
Smash that like button for the YouTube algorithm. It will help reach more people and will encourage me to give you more useful content.
I will use the time-weighted rate of return. The time-weighted rate of return measure is often used to compare the returns of investment managers because it eliminates the distorting effects on growth rates created by inflows and outflows of money. The time-weighted return breaks up the return on an investment portfolio into separate intervals based on whether money was added or withdrawn from the fund. All of these companies are listed in US dollars. That is why I will show you my returns and changes since buying these positions in US dollar currency.
If you look at this portfolio, it is not very diversified. But remember that it is only a part of my whole stock market portfolio, and I did not try to make it diversified on its own.
My overall investment wallet includes currently 18 companies from stock markets all around the world. Both developed markets, the United States, Canada, and the United Kingdom, as well as emerging markets, Poland, China, or Russia.
This portfolio achieved a return of 64.58% during this year so far versus 27.3% gain for the S&P 500 index. The calculation is made on the 18th December 2019. This portfolio started the year 2019 with just two positions. I bought Alibaba and Apple shares in December 2018.
First, I moved money from the pension scheme for my previous employer. It is a defined contribution scheme, so I do not lose any benefits with investing the money by myself. Then, at the end of January, I moved my money from the default pension fund, where my current employer transfers the pension contributions each month. Later, I had been moving money regularly around every 3 or 4 months. I waited until the amount of money accumulated was enough to buy a decent size position.
You can see that I purchased shares in April, July, and November. With new cash being added to the portfolio, I buy shares of a company which is the most attractive at the moment.
It also matters because I pay fees for trading using AJ Bell platform.
As you can see, the charge for the transaction is £9.95. So to make it less significant for my portfolio, I want to invest around £3,000 in a single transaction. When investing £3,000, that fee is only 0.33% of the invested money. Additionally, if you buy companies from foreign stock exchanges, there is a foreign exchange charge. All these fees are the reasons for minimizing the number of transactions.
So even that you pay these fees, the tax advantage within the pension account makes it sensible to use it. Also, as I told you in one of the videos, awareness of these charges taught me not to trade too often.
In 2019, my Alibaba position grew from $137.07 on the 31st December 2018 to $204.91 on the 18th December 2019, which is the increase of 53.3%. Alibaba is a Chinese e-commerce giant. Alibaba's core commerce platform grows the business quickly. In an uncertain macro environment, core commerce revenues were up 40% year over year. Alibaba is the leader of the e-commerce market in China. It has over 50% market share, which creates powerful network effects. It makes it more difficult for competitors to catch up in e-commerce offering. The first choice when shopping online in the US or many European countries is Amazon. In China, Alibaba is such a website. Alibaba is growing in different segments too. Its cloud business was up nearly 64% in the most recent quarter. The perspectives are still very bright. The cloud market is expected to grow in China at the pace of 44% annualized by 2023. Alibaba company is a dominant player. That makes the company to be positioned extremely good in this industry. My first Apple position increased in this year from $155.41 at the end of the year to $280.02 currently. Additionally, I received 4 times the dividend, 73 cents, 77 cents, 77 cents, and 77 cents. Everything together produced gains of 82.1%. Here you can see the pessimism of investors at the beginning of this year. That pessimism created a great buying opportunity. In the meantime, new iPhones turned out to be very successful new products. Also, Apple launched Apple TV Plus streaming service to benefit from the transition from cable television to video streaming services. Thanks to that move, Apple's reliance on revenues from the iPhone will go down. Apple added new AirPods to their offer as well as the new Apple Watch, which both are great successes. Health trackers are gaining on popularity, and the price ranges for Apple products this year make Apple Watches more achievable for fitness enthusiasts.
It is expected that Apple will release iPhones with 5G connectivity in 2020. What is also positive news for Apple investors is the trend showing that people use more Apple products.
First, let's look at browser usage. Safari. During the last 3 years, Apple's Safari browser grew its market share from 13.78% to 16.68%. Google Chrome is the leader, but it is good to see that Safari is gaining market share from the other small players in that area. Then let's look at the operating systems. During the last 3 years, iOS, which is the operating system used on iPhones and iPads, increased its market share from 12.3% to 13.6%. OS X, which is the operating system on MacBook computers from Apple, went up from 5.2% to 7.6%. I do not see anything concerning here. Looking from an even longer perspective, Microsoft seems to be a loser here. Both Google with Android and Apple still gain more and more market share. The next thing is the market share of mobile vendors. Apple phones gained market share from 18.9% to 22.9% in November 2019.
I bought additional shares of Apple company on the 16th January 2019. The gains from this position, including 4 times paid dividend, equal plus 68% so far.
I bought Alphabet shares to this portfolio on 31st January 2019 for $1,116.37. The increase in the share price is currently equal to 21.5% so far.
In April, I decided to buy more shares of Alphabet. Even though it increased from the level I bought shares originally to this portfolio, I still considered shares to be undervalued.
I bought shares of Alphabet on the 30th April for $1,188.48. The company share price went up 14.1% so far.
Alphabet is my third most significant position overall in my stock market portfolio.
I have talked about Alphabet in a few videos already. Check the Stocks to Buy series on this YouTube channel if you want to get more information about Alphabet company.
Gazprom is a Russian energy company which engages in the geological exploration, production, processing, storage, transportation and sale of gas, gas condensates and oil in Russia and internationally. This beaten down company was on an attractive level. At the beginning of the year, it offered around 10% dividend yield, which is a really attractive yield. I bought Gazprom to my pension portfolio on 20th February 2019. The average share price I paid for Gazprom shares was $4.665. Currently, the price is at the level of $8.03. Additionally, I received a dividend of 0.504, which means that a dividend yield was 10.8% from the price I bought shares for. My gains on the shares of this company are now 82.9%.
Its share price is still very low. Price to earnings ratio is at the level of 3. Yes, you heard me. And I am talking about the world leader in gas production. In 2017, it was the number 1 natural gas producer, contributing 12% to the total global supply in that year. Also, Gazprom owns the world's largest supply of natural gas reserves. They account for 17% of the total global reserves. You need to know that natural gas is considered to be a great alternative to coal and oil when it comes to climate because it generates less carbon dioxide when burned. It is still not a clean form of energy. It gains more support against dirty sources of energy like coal and oil. Of course, there are risks with this investment. The risk is that it is controlled by the Russian government, which holds more than 50% of outstanding shares in the company. But overall, it accounts for less than 5% of my portfolio. Cameco position is the only one in this portfolio which did not perform well, but it is also the smallest exposure in my pension portfolio. I bought shares of Cameco on the 15th July 2019 for a price of $10.22 per share. I received a dividend payment of $0.0606 per share. The result of this investment is now minus 13.3%. Cameco Corporation is the world's largest publicly traded uranium company based in Canada.
It is my second company in this portfolio which will benefit from moving to cleaner sources of energy. In the last year, the company cut the production not to sell the valuable uranium ores for unsatisfactory price. The management wants to wait until uranium prices recover.
Since the 2011 Fukushima nuclear disaster, Japan, Germany and other countries have closed dozens of reactors, which has depressed demand for nuclear fuel and forced miners to close mines as uranium prices plunged. From a $140 per pound high in 2007 and about $70 just before Fukushima, uranium fell to a low of 18 per pound in 2016 and has since recovered slightly to $25.45 today as miners cut output. There are aspects which should bring some hope to recovery in uranium prices: nuclear reactor life extensions in France, new reactors in construction in China, the United Arab Emirates, and the United Kingdom. The World Nuclear Association estimates in its nuclear fuel report that uranium demand will rise from 67,600 tons in 2019 to 100,000 tons in 2040. In this portfolio, my exposure to commodities seems to be quite high, but it does not show the whole picture on my stock market investments.
I'm not an expert in commodity investments, but I still want to have some exposure to this sector. Overall, I own shares of 4 commodity companies. These companies together account for only around 12% of my stock market portfolios. It is about 3 to 4% for each company. For comparison, my most significant exposure to a single company is to Facebook, which accounts now for more than 15% of my stock market portfolio. So I will repeat again, do not just look at my pension portfolio, as it is only a fraction of my overall stock market portfolio.
The latest investment I made was buying shares of Uber company. I bought shares for $27.38 on 7th of November. Shares are up 9.5% since the moment of buying. Uber company has been discussed many times on this YouTube channel. I will post links to the relevant videos from my YouTube channel if you want to hear more about my view on that company.
Some time ago, I created a video in which I explained why I manage my pension portfolio by myself instead of having it in the default fund. The main reason is that I want to be rich quicker. I can beat the markets with my choices. Also, sharing my ideas can help to demystify investing. Show that you do not need to make many transactions to beat the market, but the selection is the key to success. You need to focus on selecting the best companies only. At least it works for me. If you enjoyed this video, make sure to subscribe to receive a notification about a new video being published, or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!